Tesla earnings beat on both revenue and EPS while maintaining guidance. Netflix misses on revenue. Take a listen.
Beat on the top and the bottom line. Tesla earning 91 cents a share. That is 9 cents better than expected for the quarter. The estimate was for 82 cents a share. Revenue also coming in better than expected at 24.93 billion. The street was expecting 24.4 billion. Operating margin of 9.6%. But remember, what we're looking for are the gross auto margins excluding zero emission vehicle credits. We have not come across that yet. One interesting note, though, Tesla is not changing its guidance for full year delivery, still keeping it at 1.8 million. There had been some speculation that the strength of the first and the second quarter, along with the expectation of increased production in the second half of this year, might lead the company to increase its guidance. But at this point, they're sticking with deliveries of 1.8 million vehicles. Guys, back to you.
Phil, how usual or unusual is it to see Tesla change delivery guidance?
I did not expect it. I talked about it this morning on Squawk Box. If they're going to do it at any time, Morgan, likely they would do it after the third quarter. I just think that this time of year, I wouldn't expect them to do it.
Okay.
All right, Bill, thank you. Tesla right now higher by about 1%, but it's been bouncing around, as have many of these. Mike Santoli back with us. Netflix a little bit lower, Tesla a little bit higher. That's not what the options watchers were expecting.
No, the results are good, but pretty much within the zone of expectations. And it seems that both companies being relatively measured on guidance. Netflix raising guidance a bit, but not really promising that much in the way of future revenue and price increases. Now, free cash flow is going to be better for Netflix because they're not spending as much on content. It'll be an interesting test as to whether the market likes that idea of a lower run rate of new content or not. So seems steady as she goes for both of those in terms of the reaction. And by the way, also on UAL, given the magnitude of the beat that was just reported in EPS, the guidance for the full year raise is again.
It seems like the Fed rate hikes are finally taking into effect. Comment down below what you think this means for both companies going forward.